Good afternoon, World Wide Web. Happy Sunday. Another update video on AMC Entertainment Holdings and their debt. AMC currently has $1.8 billion in junk bonds that they issued in 2021 and in 2022. These bonds expire August of 2025 and they'll need to be paid back in full. The monthly payment is currently, well, in January it was at 16%, and they've raised rates four times since then. So I think the rate that they're paying is probably higher. It could be 17%, could be 18%, but they were listed in January as junk bond status. That's why there's such a high rate and a high expectation of failure. That's why the high interest rate. Plus inflation is absolutely ridiculous, and the all the rate increases that have occurred because of that have caused it to go up, up, and up. So they have $1.8 billion of, I would call it short term debt. It's due in full August of 2025. The company is expected not to be able to make the payments on the minimum payments on this debt, to not be able to make the 17% payment on the debt starting in winter of 2023. That was the prediction. That was before APE. That prediction came before APE. APE was a 1 billion share issuance of a preferred share, and they gave the first 517 million APEs away for free. They didn't get any money for these. They just gave them to people. They gave them to every shareholder as a dividend, as a thank you present. Then they got a lot of interest in APE, and then they issued another almost 500 million of them. And people from Reddit and lots of people loved the APE thing, and they thought they were going to beat the shorts and they were going to do this, that, and the other. They went crazy buying up APE, and he was able to sell into that $500 million. And what did he get for that? Well, here's what he got for it. He improved his balance sheet by $350 million from here to here. Well, I'm sorry, from here to here. We went from liabilities of 1261 down to 11.76. Actually, I'm sorry. Liabilities went down 12.61 billion all the way down to 11.76. So he shaved almost a billion with a B, maybe three quarters of it, off of his debt line. And he did that with APE money. He's working on it. He still owes the 1.81 billion or 1.8 billion. It's still at 17 something percent, and that's supposed to continue until 2025. There's no way in hell that's going to happen. So he needs to do something to pay that off and to get rid of that. And the only way I can see doing it is by coming up with some money making scheme that's going to get him a couple of $1 billion. He needs it desperately for this company to run in the black again at normal numbers. Let's see what else he got out of it, out of the APE. He also got almost $1 billion paid off of his debt. That's fantastic. It's not all of it, and it's not the most meaningful part. The bonds are still out there. The company, it says, currently has 631 million in cash. It just had 954 million just a couple of weeks ago. So I think they just spent a bunch of money on something. Let's hope they paid off their debt a little bit. Every little bit counts. The shares outstanding, 517 million, is false. They're trying to clack the APE and the AMC together. It's actually 1.41 something billion, 1.4 billion shares outstanding is what it's going to be when the judge clacks the gavel and they clack these two things together. The question in everybody's mind is, are they going to be diluting this company again? Are they going to be selling off a whole bunch of new APE issues to raise the money to pay off the bonds? Or are they just going to keep the bonds and pay 16 or 17% on them, maybe 20% on them? Who knows where this goes? Analysts predict it's not going to go past 2023. And I have a feeling the rates have gone up since then. He has to move on this one. There's going to have to be, there's not enough cash to pay for it. He doesn't have any credit. He needs to get back he needs to pay off the bondholders. He needs to get himself out of that by paying them all off so he can quit giving them 16% or 17 or 18% or wherever it's at today. That's the end of the story. There is no credit. There's not enough cash, and he has to leave some cash to run the business with. But yeah, that needs to go immediately. And I see no other way of doing this by diluting something, whether he dilutes APE or AMC after the clack. I don't think he's allowed to do that. We're going to do another video about that. But yeah, I see him definitely doing another dilution. The first one is baked in already. This price is reflective of a 1.4 billion share company. That's why it's about a third of what it used to be. A third of those shares were gifts, and the other third is a dilution. So the 2/3 is actually dilution from where it was before. AMC, great quarter coming, record quarter. It's going to be really confusing, but it's going to go up, up, and up, and up, and up. And then he's going to have to make a move on these junk bonds. He's going to have to pay them off. If he doesn't, I don't see how they're going to survive this big of a monthly payment with that level of interest rate indefinitely. It's bankruptcy is going to be obviously around the next corner, unless he can either pound APE for all he can or pound AMC for all he can. He's coming for all of us after that. But yeah, just an update video on AMC and their junk bond status. Check out what I'm saying. How many junk bonds do they have? The answer is 1.8 billion. Interest rate in January was 16%. It was up from 14% from prior. It's officially junk bond status, and it pays the highest rates that you can get on a junk bond because it's so damned risky. AMC, everybody, tough call. Play the earnings, but everybody knows that suck is coming after that. So I don't know how much that affects this or this affects that, or whether the shorts won't really have a choice. They don't really have the choice to just ride this out, for the ending. They might have to get out. They might be forced out by their broker. So if there is a earnings spike, the shorts are screwed, and they're going to be screwed really hard. And they're also going to be screwed afterwards, because after they pay off their bonds and after they're a right side up company again with 1/10 of the number of shares after this big dilution, now you're looking at a healthy AMC with good prospects. You're looking at an AMC that can make money. You can look at an AMC that can make a positive quarter every quarter. You're looking at a whole new ball game. You're looking at an AMC that looks a lot like it did pre-COVID, with about the same balance sheet, with about the same right side upness, the same ability to earn money. You're looking at a good company again. Just a whole lot less of it if in your position, if you're holding a position through this upcoming predictable dilution based on need of money and based on only one way to get it. They have to pay off the bondholder. Thank you for watching the video, and please verify what I'm saying and do your homework on AMC video, because God knows I am. Or just subscribe to the channel and I'll just tell you everything you need to know. Have a wonderful day, but definitely double check me. Have a wonderful day. Please like the video and subscribe for more updates on AMC and APE.